is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Now, Larry Pesavento.
Okay, good afternoon, everyone. This is Larry Pesavento for TFNN. If you have any questions, it's 877-927-6648. On today's show, we're going to talk about three markets that I think are at very important levels. First of all, of course, the stock market. Second is the bond market. And third are the gold and silver markets. So we'll do those in order. But I wanted to start the show today with someone dropped an email to me about a question about the overnight trading that we have now for foreign currencies and futures, and there's even some stock things that we have. But there's a lot, of course, in foreign exchange because there's more foreign exchange going on in Europe than happens in the United States, and then there's also quite a bit in Asia. But that's the third basic market would be the Asian countries. But you really need to look at some of these price swings that occur overnight on some of these particular things in foreign currencies and gold and crude oil and things like that, and the stock indices. But unfortunately, the ETFs that you folks trade do not show 24-hour trading, so you'll have these unusual gaps, which in fact are not, gaps at all. They are nothing more than, times when the market was closed. So you have to keep that in mind. So what I do is I watch the 24-hour price swings on everything and using in my analysis of the patterns that I look at. And the reason why is the volume that is there in the overnight markets is quite substantial, and it is really, really good things to look at. I mean, you have to see that the prices are very, very important. A good example of that was on May 11th of last year. That was May 2nd of last year when Osama bin Laden went to meet his friends in the heavens, wherever it was, and that happened to be also a new moon. And the reason why that is important is that was an important high cyclically. It happened, pretty much before the markets had opened, but it was a very important high. That's just one example. There's other examples of that. And since we were talking about the new moon, you folks that follow the news and stuff, and a lot of times it looks like there's going to be armed conflict somewhere in the world, and especially if the United States is involved. If you'll watch around the new moon, because most of the generals that we have in our armed services are strong believers in the book The Art of War by Sun Tzu, and that basically talks about the darkness of the moon, that's the best time to attack. And if you went back and looked at Desert Storm, you'll realize that was the time of the new moon, and Norman Schwarzkopf was a strong believer in the art of war. So you watch it at that particular time, and that's exactly what happened with the Navy SEALs Team 6 when they went in to take care of bin Laden on his final days. So that does work with the market because of the fact that the new moon is a darkening thing. It's the conjunction that starts the whole thing of the 28-day cycle. So it's important to at least keep an eye on it. The last few have not worked very well, but if you remember, February of last year all the way through, August and all the way to November the 25th, it was working incredibly well. And it'll come back into vogue again, but right now, the new moon and full moon cycle are not working nearly as well, as we thought. Now, there's also a couple of things happened about astrology over the weekend. One, there was thanks to our friend in Florida. She told us that there was a nice article in Barron's, and I went and looked it up. It was called Market Lunacy, and it was written, it's regarding Paul Montgomery, who is a fellow about my age who does a lot of cycle work, and he talked about the Bradley model and some of the, the things that are happening, and he has a, bearish outlook on the market, pretty much like I do. Anybody that looks at the Bradley model, you can't very well be bullish up at this level. Just by the way the market is acting, and just the fact that this thing is hanging here, much like it was in October of 2007, and whether that's going to be that type of high or not, I don't know. But we've made lower highs in everything in the stock indices, with the exception of the Nasdaq. That's the one that's gone up and and made a higher high from 2007. And we've mentioned this divergence there, that, the fact that the NASDAQ has made a butterfly pattern on the upside where we have not made new highs in the S&P, the New York Stock Exchange Index, the Dow Jones, the transportations, utilities, so there's a lot of divergence. And that's we've talked about many times. It's related to Apple because that's around 17% of all of the NASDAQ stocks, and it pulls a lot of things up with it when it goes. So, that's something that we want to to keep in mind of what we're watching. The fact that Barron's is starting to write articles again about the Astro things, and it's going to be interesting, and more of these come into play because people will realize these are nothing more than natural cycles that occur, and they're just numbers. There's nothing mysterious, about what happens, when these planets move around. They're just the normal cycles that make our things work. They're no different than when we have the equinoxes and the solstices, when we split our year up into four quadrants. That's all part of, what we're doing when we're looking at cycles. And that's that's the real beauty of what we're trying to do when we look at these cycles. Unfortunately, they don't work 100% of the time, and that can be a problem for some people. But unfortunately, that's just the nature of the beast. When you're trading, not everything works 100% of the time. If it were, there wouldn't even be a market. So this is why we have to keep in mind that everything we do is based on probability. Now, for those of you that go into Tiger TB, there's going to be a chart that I'm going to post in there this afternoon. It's the S&P chart going back about 15 years. Actually, it goes back about 17 years, but the actual data that I'm looking at is around 15 for the comparison. The relationship between the drop in interest rates, the relationship of the cash S&P. And if you'll take a look at where we are right now, we are at a maximum divergence that we have never seen in the near-time lifetime of trading, the S&P, and that's only been going on since around the 1950s. And so it's important to realize that this divergence that we're having, in other words, lower interest rates and, higher stock prices, tells us that people have a tremendous appetite for interest rate-bearing things like bonds. Okay, now this goes back to Bernard Baruch, who was one of the great speculators of the 1920s, who was a good friend of J.P. Morgan and also Jesse Livermore. Baruch was a real master at what he did. He started when he was 19 as a broker, became a trader, and built up a huge fortune. Later became, the confidant, the economic confidant to Franklin Delano Roosevelt. And he was really quite a spectacular person. He wrote a book called My Own Story, which was his autobiography. A great title for an autobiography, by the way. The guy was really creativity bound, I suppose. But anyway, in the book, he talked about, a couple of rules, and one of them is when you see something in the market, that it has already been priced into the market. And we've seen this, what's happened with Greece and, other things that have occurred. The market follows the trend. We have to realize that. But the second rule that he talked about was one of my all-time favorites that I talk about, and that's the chart that we're talking about when we're looking at interest rates and, the price of stocks. And that is, he said, don't be concerned on the return on your money. Be concerned on the return of your money. And nothing is more important than what's happened in Greece. I don't know if you folks that are listening follow, when you hear about all these credit default swaps and things that have happened. But what happened was, Greece basically didn't pay off the bonds. All they did was they issued new bonds with a longer maturity and also a slightly higher interest rate. That doesn't mean that these bonds that they just issued are going to be any better than the stuff they just got rid of. It's just they paid Peter to pay Paul from the right-hand pocket to the left-hand pocket, but the left-hand pocket had a hole in it. So this is this is what's going on in the world. So you have to realize that when you hear stuff like this, to try to think about what happened over there, and that's in fact what they did happen. They bought some time, and whether that means anything or not, I don't know. Now, when Greece defaulted, they had to default because they have contracts outstanding called CDSs, credit default swaps. These had to be made valid. If they didn't, that would have really shaken the financial tree, believe me, because this is what happened when Lehman Brothers went out. They had nobody there to protect them. That's what happened to AIG. They had all these other contracts, and they just couldn't handle it. And all this other stuff. So just keep in mind that this is, all the stuff that comes to mind when you're hearing all the news and everything and all the different things that are occurring. And this is the primary reason that I'm basically a chartist. I just look at the prices. If prices are going down, there's more selling. If prices going down, there's more buying. And that's the premier thing of what I look at. I don't watch the news other than the occasional thing when someone brings it to my attention, like the article in Barron's, and then also the thing on the credit default swaps, because people were saying, well, they bailed Greece out, but frankly all they did was move it from one pocket to another. They really didn't do anything, really, really dramatic. So the problem is still there. It's a question is, how they're going to be able to do it. Now, I wanted to mention when I missed something, and that was on the 24-hour trading. Years ago, when they started 24-hour, what they called after-hour trading in stock, what they wanted to do in the New York Stock Exchange was to get people, to trade all night long and stuff. Well, the only people that trade all night long are Forex and futures people. The stock, overnight trading in stock really did not amount to much. The amount of volume that they do is, really pathetic compared to the, I shouldn't say pathetic. I guess minuscule would be the amount that I'm saying, because it really is not very much at all. So when you see the overnight quotes of things, after, Apple introduces earnings, or Green Mountain Grocer comes out and has a problem with, competing with Starbucks, those big gaps that you see overnight usually are not accompanied by a whole lot of volume. That's not the same as in the Forex markets, where the volume is huge pretty much all the time, with the exception when Asia opens, early in the evening in New York. So other than that, it's trading pretty heavily 24/7, and most of the commodities trade pretty well on the 24/7 basis, especially the Treasury bonds, the crude oil, and the gold. Those are very heavily, and the grains do okay too. So if you are charting, you really need to look at the overnight markets. Make sure that your data service gives you these overnight quotes, so you can see these spikes that you have, because these spikes on the chart will be reflected in these patterns that we look at. Because if you don't have them, you're not going to see it, and you really need to be able to see that when you're actually looking at these charts. And I think that's pretty apparent in some of them anyway. So we'll wait and see how it actually works out. Going back to the chart on the S&P, I've also in the newsletter this week, I've reiterated the point about how the NASDAQ has expanded to this 1.27 expansion. Folks, the S&P would be up around 1550 if it had the same run that we had in the NASDAQ. So that's showing you that the overall market has not really responded to that much. We've got to take a little break here. When we get back, I want to talk a little bit about the New York Stock Exchange Index, and we'll get into the Treasury bond market, because that is at a really, really critical level. 877-927-6648.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective and maximize your returns. Direxion Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirexionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direxion shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direxion shares. To obtain a prospectus or summary prospectus, please contact Direxion shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of The Money Game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end, as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
This segment is brought to you by Great Panther Silver. For more information, just click the Great Panther Silver banner on the front page of TFNN.com.
Okay, we're back, folks. 877-927-6648 if you have any questions. What we were getting ready to talk about now was the New York Stock Exchange Index. And in the Tiger TV, I posted the chart of the index, and basically what it's doing is showing what happened when we hit that 786 retracement. And then last Tuesday, when we had the big sell-off in the stock market, we left a big gap. And then the market rallied back into that gap, which was an exact 618 retracement that we made on Thursday of last week. And so far, we've done absolutely nothing since that point. Now, if we get above the 786, which is above the 8250 in the New York Stock Exchange Index, that will take the Dow well above 13,000 that Basil was talking about, and it will really be, everybody's going to be talking about the huge breakout, but frankly, it's going to be difficult, in my opinion, just looking at the cycles and the Bradley model and all the patterns for the market to break out to the upside at this point. However, in 2000, in January of 2000, the rest of the market didn't go anywhere, but the NASDAQ went up for another 5 or 6 weeks. It topped on March the 24th of 2000, and of course we're coming into this really big cycle date that we have with the Bradley model, and then we have the equinox that comes in on March the 20th, and the spring equinox, so that's going to be real interesting. And then we have the new moon that occurs on the 22nd, which is also going to be putting everything together. When you add up all these solar flares that we're having, we'll be able to have some pretty volatile markets is what I can see ahead. Now, speaking of these solar flares, those of you that have an interest in it, there is a report from the Federal Reserve out of Atlanta. It was written in 2003, and it talks about geomagnetic storms that we're having in the sun right now, and it shows relationships between these and how it's affected the market. And there were statistics that validate, these things do have an effect. Remember that our bodies are 85% water, and the moon is not even a planet; it's a satellite, and yet it controls the tidal waves and all the water that's here on Earth. And since our bodies are 85% water, we are most probably affected by some type of the gravitational pull of the moon in our normal psychic. Those of you that really have an interest in it, there's a free book out there by Dr. Al Larson called Your Electric Life, and you can get that if you go to www.moneytide.com. It's in PDF file, and he offers it, free of charge. It really, for me, it explains, why things work the way they do. It's just very simple how he approached the subject. But Al's a really bright guy. He has 2 PhDs, one in computer science and the other in I believe it's astrophysics. But he's a very, very smart fellow, and he worked for AT&T for many years, doing a lot of work with this type of thing for their communication system. So he's just not a stranger to it, and he gives a pretty good idea of what is actually happening, with these things that are occurring. Anyway, more and more of it's coming out, so you ought to take a little bit of an interest in it, because eventually I think we'll see more and more in the press, like we're seeing in Barron's now, and even the Fed writing articles about it, but that was a long time ago. Still tells us that it's still out there, and people are beginning to look at it. So we'll be able to, see if that's happening. We already know that the MIT has already done a lot of work on this, so it's important that we at least follow it. You don't have to talk. You don't have to convince this old cowboy about it, because I've been looking at it for a long time. I don't know what the final answer is. I know that there's some answers there, and a few questions have popped up along the way, which will always happen. But overall, it will probably lead you a lot better than listening to some of the economists. Remember that the Bradley model is done years in advance, and it does a tremendous job of giving an idea of what the trend of stock markets, prices are going to be. I mean, I've done 122 years of research on it, and it's better than 70% accurate, which is better than, some economists, and most economists, I suppose, but, we'll have to, let the final judgment be made, later on down the road. But we are over some really major stuff here in the stock market this next week or two, and we'll see what happens. The fact that the market has not broken much, we had the one bad day, and then the market came right back into it, really doesn't mean a whole lot to me, because it's gone nowhere, other than the NASDAQ, of course. But the thing that's important is that after we get into around the 22nd, all of these cycles have been getting ready to end up, and that means it has no other way to go except to the downside. And if we start going up into late March, early April, that means that all these are breaking, and it really means that they're not working, and you'd have to stand aside. But right now, it still looks like we've got it. We've got these major divergences that are out there in the NASDAQ, and also in the interest rate, environment with the S&P. So this is very, very important divergence. We got a break here to pay a few bills.
877-927-6648. Hi, folks. This is Tom O'Brien. If you want to get great trade setups in equity as well as the option market, come over to TFNN.com and test drive my daily newsletter, Market Insights, for 2 weeks absolutely free. Each trade setup comes with a profit projection as well as stop placement. Included in Market Insights is a Twitter alert service. This allows you to take advantage of intraday setups. Volatility is back in the markets. What does that mean to you? To me, it spells short-term opportunity each and every day. The days of trending up on lighter volume are gone. We have come off the highs with volume across the globe. Don't get caught in a complacency trap. Many of the indices have given back 2 months of trading in 1 week. We have a trader's market. You can take advantage of this trader's market by test driving my daily newsletter, Market Insights, free for 2 weeks. Market Insights will give you the edge you're looking for in the markets. Go to TFNN.com, under newsletter, hit the Market Insight tab for your 2 week free test drive right here, right now.
In the world of financial markets, there's a new player in town with an exciting new way to trade the markets. Nadex now offers binary options as well as bull spreads in a wide range of indices along with commodity and forex markets. With as little as $100, you can gain access to a new way to trade global financial markets while guaranteeing that your risk will always be capped. Nadex allows you to multiply your trading opportunities in ways never imagined before and access markets you once thought were out of reach. With short-term trading opportunities available, including binary options expiring each hour the market is open, Nadex allows you to take advantage of a variety of market conditions regardless of volatility or market direction. Now is the time to take advantage of this exciting new market. Don't let this trading opportunity pass you by. Open your account today by clicking on the Nadex banner on the front page of TFNN.com. Nadex, a better way to trade.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit TFNN.com today.
Hi, folks. Turns out my best student became my best teacher. Steve Rhodes absolutely raised my standards, and I'll guarantee he'll raise yours.
Thanks, Tom. What I've learned is that if you want more, you must become more. And that transformation, folks, that occurs the moment you decide to become a master. Now, the quickest way to mastery is through immersion. And for 2 solid days in Denver, Boston, and Tampa, I'll create a new standard of wealth for those few trader investors who have a burning desire to succeed. At my Master Trader course, I'll teach you how to create the ultimate money machine. These are the best kept secrets in the business. Roadblocks, folks. Dabblers give up when they first appear. Stressors last just a little bit longer, but masters expect roadblocks and achieve extraordinary results when they bust right through them. I have all the benefit of knowing the type of wealth creation that I can generate for you. You don't. That's why I'm making this unconditional money-back guarantee. If for any reason you're not satisfied with my Master Trader course, I'll refund every penny. That's right. I take all the risk and you get all the benefit. Go to the homepage at TFNN.com and sign up today.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Okay, we're back, folks, and we were, talking about the overall state of the market, that we've had this, gap down on last Tuesday. We came back and filled the gap, and we're just chopping around in here, waiting for this cycle high to come in that we think is occurring, and we'll be able to see if, in fact, it's going to be the case. Now, we topped quite a few days ago, of course, in the utilities and also in the transportations, but the NASDAQ has held up, all of their stocks, plus it's pulled up some S&P stocks also, and so it's able to, hold this, thing to the upside, and we'll see what's actually, occurring here. Now, the next market that we want to talk about is the Treasury bond market, because we are at we've completed a perfect Gartley pattern in the June Treasury bond, and it looks like that we are at a point where we're really ready to, get ready to see if this thing is going to move, to the upside, and we have completed several AB equals CD patterns, which is, and that's what we're looking at, and we'll see what's happening, and then we'll go from there. If you'll keep in mind that Gartley patterns, don't too often, that it is going to be really, super important here. We've talked about this support at 139 in the June bonds, and we have made, two perfect AB equals CD patterns. These go back a long way, folks. These go back, way back into, in December, how this pattern has held up, and it's been in this wild trading range, between 145 on the upside and 139 on the downside, and now all of these are completed, and the pattern in the bonds is bullish. There's no question about it. At least if you believe in the Gartley pattern, this is one of the best ones that we've seen in quite a while as far as everything coming together, and so we'll have to wait and see if it's going to work. Now, that would give us a price objective up into that 150 level if that Gartley, does in fact work. So we'll be able to, see if this is going to be the one that is going to take us to the final place that we want to see up here at that 149, 150 level in the June Treasury bonds. It's not actually that far away. Considering that we've had, such a long consolidation since November, and, we should get a pretty good shot at it here. If it closed below 139, my trade of the year in the Treasury bond is not going to be triggered anywhere near where I wanted it to be, so I'm going to have to figure out a way to get back in it, or to get in it eventually. In other words, if it breaks below 139, I'll look to, sell that first rally back that we get, because I don't want to sell into weakness. That's one thing that I've learned through all the years, that selling weakness and buying strength has never worked for me. Might work for some other folks, but I just don't do it that way. It hasn't worked, and ever since I've started using the patterns that I use, it's been a lot different, a lot easier, and I'm trying to figure out on how much I have to risk instead of how much I think I'm going to make, and that's the biggest difference that we're looking at here. So keep in mind this price that we're looking at in the bonds at this 139 level, because this is really, really important. That's the 618 coming off the October lows, and we made those highs, way back in the early December, up in that 146 level. And now what we've done is we've made a 61% retracement at this 139 level. We've done it in double AB equals CD formats. If you get a chance to go into Tiger TV and take a look at it, you'll see that this is what this is what we're looking at when we have a pattern like this. And we have two of them. We have two AB equals CD patterns, one since February, and also one of them since December. One of them is larger. That's the December one. So you got two ABCD patterns coming in at the 61% retracement, and that makes it a Gartley. Someone asked me a question: is it a double Gartley? No, I don't know what that term means. There's only one Gartley, and that's the one from October to the high in December, to the retracement that we're making here in March right now. And all I'm saying is that there happens to be two AB equals CD formats bringing us down from December into March. But the main one is December into March. The smaller one, February into March, is an AB equals CD pattern, but the real Gartley is based from November to December to March. So that's 2 months up, 3 months down, and that's that's what it looks like. Now it's got a whole 139, because if it doesn't, then all bets are off. So we got to keep a really close eye on that, because I'll give you a really good example as we move through the show here, because we have the same situation going on in the gold and silver index and also the gold bug index, because both of those are doing the same type of thing that we're having with the Treasury bonds, except these are in longer-term downtrends, and the fact that they're a little bit shorter in length. They only last about a month or so. This one lasts more than 3 or 4 months, and the gold silver one and the gold bug index are a lot different. So I'm going to be talking about the XAU probably first in the show, because it's easier to look at. The gold bug index, I'm actually not sure how that thing is actually calculated, so I got to be really careful with what I say here. But the main thing that I want to watch on this gold and silver index is the fact that we are right at the really strong place to take a look at this Gartley pattern, because we've had 3 lower Gartley patterns on the bearish side over the last several months, and now for the first time in a long time we have one that's setting right at the 786 retracement of these last moves, and that should tell us that we are at a major point here in gold and silver, that if it's going to hold up. That's what's going to be interesting, because we have a potential buy in the gold and silver stocks, and yet at the same time, I'm getting sell signals in just about everything that's traded at the New York Stock Exchange, the NASDAQ, and the NYSE. I mean, everything is just extremely bearish as far as the patterns look. So this means that in order for the gold and silver pattern to work, the gold and silver stocks are going to have to go up, and the only way they're going to do that is that if gold and silver actually can, break out to the upside. And this is, this is going to be a $64 question if this, in fact, is going to happen. But, this is what we stand at right now, because if we close, below 177 in the New York Stock Exchange Index, this is going to be, incredibly bearish on a longer-term basis. And that's why I think it's important to watch that number of 177, actually 177 to 176 in the New York Stock Exchange Index, because if that breaks, that's telling us that, we'll most probably go down. That would be equivalent to the gold breaking down at the level of the 1760 level. If we go below 1760 in gold, that would really be a negative sign, because that was a perfect 61% retracement of that last move. And, it's really important from a ratio level and a pattern level that 1660 in the cash gold, which we're trading April now, it's very important. That price in silver, by the way, is 32.50, and so that's the the main thing that we want to watch on this, because it's completing Gartley's on both the gold and silver index and also the gold bug index, both of those. And I'm not going to put up the gold bug index because I don't know enough about it, other than it's a way of measuring the number of people that are bullish or the number of people that are bearish gold. And right now there's quite a few people that seem to be, getting very, very close to the price of on the dollar index, the gold silver index is at the exact 786 as we're speaking right now, right around this 183.80 level. That's why I'm saying $6 lower in this would not be a good sign, and that would tell us that this thing is breaking down, and we'll have to watch it. So we got three things that are really, really jumping around this week. Of course, the stock thing has been jumping around since January 30th, and it's gone nowhere for 5 weeks actually. And, we've topped in, a few of those indices like the NASDAQ, not the NASDAQ, the Dow Jones Transportation and the Utilities Index, and that's the main ones that have topped. The others have not yet, but we'll see. The New York Stock Exchange Index also has not topped, and so we're watching that very closely. So we have three things that are really important today, this week, and that is the stocks, the Treasury bond because of the Gartley, and the New York stock, the gold and silver index. And because of the fact that we've completed this Gartley, we've had several higher bottoms now since October. So it's very important that they hold these levels. That's 1660 in the gold, and it's $32 per ounce in the silver. It's important that we hold those levels. As far as the open interest and volume in the gold and silver, they've gotten hardly any help at all. I mean, they've not budged at all. For everyone that leaves the market, somebody else comes in. So there's really been no change in open interest. The volume still remains lighter than it was, when the top was being made and everybody had to own silver at, $49 an ounce. So we'll just have to wait. All I know is this is going to be a critical week here, that if it can hold this level and work higher in the gold and silver, that it has a chance to make, substantially, higher prices. We also need to talk about today the fact that we are very close to a very, very strong support in the euro contract, the forex market for the euro versus the U.S. dollar. We've reached some very, very critical level here overnight. It held it several times, and the fact that it made it to the exact level is very important, in my opinion anyway, and because it makes up about 20% of the FX market for the dollar index. We held this 130.80 level in the euro, which on the 60-minute chart was the exact 61% retracement over the last several weeks. And if we break below that, that's going to set up a potential failure below 129 in the euro contract against the U.S. dollar forex. And if that occurs, then we're looking at a lot lower prices to the downside. But right now we're just setting right there at that support. Whether it holds or not, we'll have to wait and see. but as we're speaking right now, the support is holding relatively well, and we have a chance at seeing if it is going to be be holding. Right now, it looks like it is. This would be equivalent if we break below this 130.80 level. That's going to be the equivalent of the dollar index taking out the 80.50 level on the upside, and we'll have to wait and see if that's going to happen or not. Now, we mentioned about the Japanese yen. We've been very bullish with Japanese yen since 73, and then again at 76. And we've gone straight up past any, expansion numbers that we look at, way past the 1.618 level above 82. And so anytime we get a good correction in this and the ABCD on an hourly basis or daily basis between the dollar versus the yen, you really want to, take a look at buying that, folks, because that could be the big sleeper in the currency markets for 2012, because, it's gone from, 360, all the way down to, 72, so it has a long way to go back just for a rally because it's only trading at 82 right now. So we'll have to wait and see if it's going to happen. But, the way it's taken off out of here, you really want to be a buyer of that on the first pullback. That was one of the things that Gartley talked about in his book, Profits in the Stock Market from 1937, is that if you miss, the first part of the move, you'll most probably get a chance to buy that first retracement, and that's where the Gartley patterns comes from, is you don't have to pick the bottom, you wait till the bottom is in, you look for the pullback, and then you don't have to take a look at it from that spot, and that's why you want to watch this Japanese yen. We've been following it, all along. I try to do it on every show, but I don't always get it covered like I'd like to, but if we could get a pullback into about 79 or 78 in that index, the dollar versus the yen, I would certainly, like to be a buyer of that at that particular time. Now, if we talk about the dollar index, it's very difficult trading the dollar index itself because it's exchange traded. It's not a forex traded vehicle, and so the volume in the dollar index is not nearly as big as what happens on forex. I hope you folks realize that the dollar index is basically an index that is exchange traded. I don't know, everybody that trades Forex trades the pairs. In other words, the dollar versus the yen versus the pound, whatever the major crosses are, and that's how they do it. Where the dollar index gives an idea of what the overall picture of the dollar is, but it's biased because there's really only 6 major commodities in there, and the euro and the pound and the yen take up about 50% of it, as I recall. So it's it's a tough index to to gauge of what the dollar is really doing. It's a good tradable index for somebody that, that has it's not trading large size. I think it can take 10 or 20, contracts without any trouble at all. But anything beyond that, I think you'd have a more difficult time. Whereas with the Forex markets, you can throw millions of dollars at the euro and the pound and the yen, and, believe me, they take just about anything. Somebody's always on the other side of that. So they trade, huge amounts in Forex. And, when you compare it with what happens in the stock market, it's basically the stock market is a small fraction. I mean, a really small fraction, probably on the order of 2 or 3% of what happens in Forex every day. The bond market is probably 5 or 6 times bigger than the stock market, and, that also has some pretty good, volatility. So we've got to take a little break here, and then we'll be back to wrap up the show.
At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, just want to let you know I did give you some jewelry. My jeweler offered me about $650. I should get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
And very happy.
Well, I appreciate it. Now, did you sell us jewelry or did you buy coins off us?
I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted that was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio. Therefore, we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, we're back, folks, and I'm going to be wrapping up the show. I posted into Tiger TV a chart of the dollar versus the Japanese yen over an hourly period going back into late February to where we are now. And if you ever wanted to see a beautiful three-drive pattern, in other words, drive 1, drive 2, drive 3, making a higher high, it is perfectly symmetrical. The AB equals CD leg is perfect. And we also have the time between top 1 and top 2 is exactly the same as from top 2 to top 3. So that puts all the symmetry together. It's actually a textbook, and would be looking at around 81.30, about 70 pips as the first correction for the 70 pips from where it's trading right now as the correction. That would be the 618 off of leg 2. So that's an interesting pattern if you get a chance to look at it and take an idea of, how some of these patterns work. They don't work all the time, but they work more than they fail, and that's the main thing to look at. Now, someone had a question about, potentially, because I'm very bearish stocks and I'm also bearish bonds, as if you could put on a spread of being short the stocks and short the bonds. folks, that's known as a Texas hedge. I mean, you don't want to be long the cattle and long the futures, because if you're in the cattle business, you want to hedge your cattle, and that if you were long short stocks and short bonds, you're double exposed. But I think that's what is happening with the market right now. I think everybody is really concerned about, how much interest they're going to get, and you should start thinking like Bernard Baruch and say, don't be concerned on the return on your money, be concerned on the return of your money. The time to be the borrower is now. The time to be a lender was, back in 1981 when, the rates were 14 or 15% on Treasury bonds. Tax-free munis were 16, 17% AAAs. And so, this is what we're looking at. The downgrading services of Fitch and Moody's and the S&P, those guys are so far behind the curve when these things happen. I really don't understand what people even take advantage of even listening to what they're saying, because, the cat is already out of the bag when they decide to downgrade something. Like Fitch, formally made Greece in default. I mean, hello. I mean, they lost 75% of their value, and then they offer garbage in return for it. Of course, it's garbage. You don't have to downgrade it now. It's too late. And on that vein, someone asked me the question this weekend. I happened to be with some friends, and they asked me about Apple. And the fellow had bought Apple at an incredibly low price several years ago, and he was saying that he was a little nervous here. And I said, you just answered your question. I said, because if you're nervous, that your body is telling you, your psychic is telling you that, your greed mechanism is kicking in here, so you better be very, very careful. It reminds me of one of the best things that Larry Williams ever taught me, and that is always use the calculator indicator for, something when you're getting ready to buy or sell. In other words, if you go to the calculator first to find out how much you're making on something, do yourself a favor, pick up the telephone or hit the button on your computer and, get out of it, because your greed mechanism is telling you that, I'm really starting to add this up, and I'm a real genius with this. And it's answered your own question. And they were talking about the price of $550 per share, which Apple did hit today. And frankly, I don't think it makes any difference whether the price is $550, $525, $500, $400. None of the even numbers made anything. When it's finally over, it'll be over in Apple. And everybody on the street, there is not one single firm on Wall Street, I'm probably pretty sure across all the other continents too, has anything negative to say about Apple. I mean, I can't say anything negative about Apple, but everybody's bullish. When everybody's bullish, there's only one side that's there, in my opinion. Now, they could stay bullish and everybody could be right till $1,000 a share or $700 a share. All I know is that we're in a vertical parabolic move on the long-term weekly charts of April, and we know how Isaac Newton talked about that. What goes up must come down. Talk to you later, folks, on Wednesday. May God bless.